Uh-oh,
for
should we
5
tweet
minutes.
this? Should we exit?
Yes.
Whatever we.
Re-exit, please.
What's that mean? Re-exit?
No,
Like,
meaning retweet it, but I
Oh,
don't know what
Oh, here we go.
I'll send it. I'll send it. I'll send it.
Yeah.
Bob, are you on Twitter?
No.
Okay.
I probably
His
should.
TikTok, though,
The
Bob's
jump
TikTok
in.
is amazing, though.
No, it's my Instagram that's amazing.
Yeah, he does a lot of recipes and stuff.
Hey, big follow the Jumbos this year.
We are 5 and 3, I believe.
I have over 12,000 followers on Instagram, but it's not financial stuff.
Is it sports cards?
Yep. I need to update. I haven't had time to post anything new.
I think you should be a bit long Pokemon cards. That's what I'm telling you.
You guys,
I want Charizard.
what do you think happens with the market next week? Does the Trump rally resume?
I mean, everybody's bullish. I don't know. I haven't seen one bearish person out there. Maybe I'm missing them, or I don't watch.
It'll be interesting when he starts, announcing the cabinet picks, right?
Oh, it'd be fascinating. Everybody's jockeying to get influence now, and I don't know. We got to see with the bonds and the equities both keep going up here. That's sort of.
I imagine John Paulson is going to be U.S. Treasury Secretary.
He's one of the leading candidates they're talking about.
Yeah. There's another guy here in town, Charleston, where I live, by the name of Scott Besant, and he's one of the candidates. He's a Charleston guy.
Yeah. I mean, Trump's moving pretty fast to put together his cabinet.
Yep.
You've had follow through.
I'm sorry?
Have you been tapped yet?
He hasn't called me yet.
Yeah.
Someone reached out to me to ask for your number, so it's, you never know.
I could say something, but I won't.
Okay. I'm just baiting you to.
I know you're baiting me.
I hope the rally continues next week. I really do. But like Bob said, with everybody thinking that it's some sort of amazing change, the expectations are running pretty high.
Now, has the House of Representatives been clarified?
I don't know.
No. In fact, last night it was like 11 o'clock or so when the AP finally called Arizona and Nevada, I think. So for the president.
A clean sweep of everything, including the U.S. Supreme Court. You got to expect an aggressive agenda.
Yeah.
I just hope that people who were like emotionally upset because again, to be disappointed, I understand, but I hope that that people realize that when your candidate loses, I actually thought the president's speech was actually very, very good. I didn't think her speech was very good, but I thought his was great. Of like, hey, listen, it's a contest. You try your best, and if you lose, and you move on. I thought it was great.
Yeah, and you can't change things you can't control. Right?
Yeah. I have a couple friends who are kind of going into this, and during the day after, were pretty off the deep end.
Yeah, including my wife.
Yeah. That's tough. I have some friends that the household is not on the same page, and they're kind of not happy campers today or yesterday. It's going to be interesting on energy, though. He keeps saying, drill, baby, drill. You just can't go out and make these companies drill. It's just not like, okay, guys, go start drilling more wells. They're like, no, we have this discipline. We're being rewarded for return. We're going to
remember years ago, they didn't have the discipline, and they all got whacked.
Right. They learned their lesson, and they seem to be sticking to it now, going on 3-4 years.
That's good.
So, not good for the oil field service names. I'll talk a little bit about that, but yeah, it's going to be.
There's nothing going on.
Yeah.
What do you mean, Kevin?
the drillers, the seismic companies, the Schlumbergers. I mean, it's just dead money.
Yeah.
Well,
All right,
I think
are we going live
I
now?
think we're live, right? I think we're now off our timer, our countdown timer. We're here. I'm only a little bit into my coffee, so I may be lower energy than usual, but I'm going to count on the others to carry me through. Paul Meeks bringing in some Latin flavor, Kevin Baker bringing in some Bitcoin, Bob Morris talking about gas and energy. I'm laughing at my own previous joke of Bob Morris has gas, which is a very juvenile but funny joke that I might just always use. And then I'm going to talk about Teva and Viatris, the generics. But maybe, Paul, we can kick it off with you. Mercado Libre. I thought it was a Jack Black movie. You're going to tell me that it's not. So tell me a little bit more about this and why you're disappointed but thinking about buying more.
Yeah. So, David, first of all, even without the coffee, you got some good jokes. I love it. Maybe you don't need the caffeine.
I have a book here.
So, I was on the program on Wednesday, and I had written a note that I was pretty bullish on Mercado Libre, ticker symbol MELI, essentially the Amazon of Latin America. And I believe in the cockroach theory, and they smoked it to the upside and had a big positive earnings surprise last quarter. I've been in the stock for many years, but unfortunately, not the case this time around on Wednesday night. And even though I had a long-term big profit, I shaved that profit by about 16% yesterday. Now, today, the stock is finding some support at its 200-day and bouncing. I'm going to let Bakes talk about that. We were speaking about that in the pre-show. But revenues, fine. A delta and a pretty significant year-over-year 200 basis point delta lower in operating margins for two reasons, really. Building logistics capability, which in the past has actually been a good idea for them. I think that's less controversial. But the other thing, David, is leaning pretty heavily in to their credit business, and specifically a growing proportion of their credit book coming from the credit card, which has a lesser spread. Now, I'm not so worried about these things, maybe a little bit more worried about the credit side of the house. But this company has shown in the past that it rebounds nicely. And I think the faux pas this particular quarter by the management team was not necessarily either the two deltas that I mentioned, but the fact that they probably should have telegraphed it, right? If you're going to have aggressive, not fundamental problems, but a pinch on your operating margin because of self-inflicted wounds, upping your targets for spending, you could have told people that. You could have led that to the sell side analyst before the call. So I think it's kind of a investor relations screw up, right? Or they should have at least eased that out there. So I'm going to take a look at this company because, if you expand your credit book, then you have to go Charlie Peabody and start to look at non-performing loans and provisions for such loans. I'm a tech analyst, not a financials analyst. But this company did a nice job last night on the conference call. I feel like they almost to a basis point pinpointed the delta. I'm comfortable with it. Very little of the delta change was due to fundamental factors. And of course, with this company having three huge geographies, we have Argentina, Brazil, Mexico, with Mexico being the biggest. But as we all know, in comes Javier Milei, president of Argentina. He took office about a year ago. And so that was, some turbulence in both directions, actually. But if this stock holds its 200-day, and it looks like it's doing that, I took a look at a long-term chart. Over the last several years, we've had 4 or 5 big bounces on these kind of strategy shifts, which I think it's a good management team. I trust them. And when you bounce based on one of these asset allocation calls that initially disappoint folks, we've had 30 to 40% moves. And so held the stock for a long time. have a mea culpa because I sucked on my call the other day. But now I'm actually looking to either add to the position or in accounts where they don't own any melee. I'm going to see the technical analysis. I want to see things firm. And I think I might, not go in with a big position because I got to become a better financials analyst. I'll go in with a small position.
So you mentioned the financial side of things, and for people who don't know this company, this is essentially the Amazon of Latin America. Is that right?
Right.
So the financial side, and I've seen this with drug companies, and I've seen it with other companies where they have another good business. It just happens to be a lower margin business, and when the mix shifts to that, margins go down and people start to worry when really it's actually no, the other business is fine. It's incremental dollars. It's marginal dollars that you're talking about. Does this make a case though that maybe they should just separate the businesses, or is there a real synergy between the two?
I do think that there's a synergy. Their net promoter scores go way up as they extend loans to, because you're talking about a mid-tier to even lower tier customer. And so over time, and this company's been around a long time. They were founded in 1999, went public soon thereafter. And so I'm pretty comfortable that there are synergies. I imagine if they were to ever spin it out, I don't think that's in the cards. I think there might be two pretty worthy businesses here. So the thing with Mercado Libre is you're absolutely right. It may draw down margins. And even within Mercado Libre, we're moving to a greater portion of credit cards of their credit book. And that, at least in the near term, brings some skinnier margins. And then it brings, kind of, we're bankers now. We're commercial bankers. We got to start following this thing. But I tell you, these guys are pretty savvy. They're down in Uruguay, but all the leaders of the company have been there essentially since the founding, and they're all Wharton and Stanford guys. Very tight management team. Even the press release and the conference call I attended, man, they were accounting for every basis point of this delta. I mean, I was actually super impressed. But again, they should have told us a little bit about this, increase in spending before the call, right? They didn't have to lower the boom like that. It was kind of weird. Investor relations.
One of the things that you're really talking about is that sometimes with overseas companies, let alone Latin American companies, you get kind of a third tier management team that might be a great idea, but you worry about their executing. But you've said two things that I think are really important. You've said a lot of things that are really important, but the two things that jump out are, one is that they've been around for a while, and that they're really sophisticated, that this isn't like, hey, it's a new IPO, you should take a look at this. This is kind of an established, or not kind of, this is a fully established business.
Yeah, I would encourage people to look at either follow the webcast like I did, take a look at the transcript that's available, and even the presentation deck that was a supplement. And they have an earnings bridge and all the, as I said, all the BIPs, spoken for. I'm pretty impressed. Very tight management team. That's one of the reasons I like it. Usually they think, you get out of the United States and some of these guys are class clowns. These guys are actually pretty good.
So, Kevin, what do the charts look like for this? Should we be interested at this price or wait for a better price? What's the story technically?
Yeah, what I like here is that there are a lot of Paul Meeks out there that have been in this name for 5+ years, have made a lot of money, are going to have a conversation with the CEO and CFO offline that probably fortifies their opinion of the company. I also like technically the fact that it came down and it paid respects to the 200-day moving average and closed above it yesterday during this gap down, and we're bouncing off that 200-day today. So that to me means it's a hold, maybe a small buy like Paul was suggesting. I get concerned when the 200-day gets violated. That's when I start my self-discipline kicks in. That isn't happening with Melly right now.
So when you're talking about the 200-day moving average, that's the bottom, so like kind of 45-degree angle line, the blue line on between the stock chart. Okay, so then when do you say, well, this is a really bullish sign? When it crosses that, I don't know what the green line is. Is that the 20-day or the 50-day?
I look at the 50-day. The 200, the 20 gets really, really noisy and whips around. So this is still in an uptrend. It's a setback. It has to chew through that gap that happened at I guess God, I got to put my vanity aside here, and the 2000 level, it is when it took down, and 2122 was the high, and then we came down and we paid respects here at 1749, and then closed above the 200-day moving average. So I don't like seeing these big volume downturns, but I do like seeing this uptrend in a class act name that I think is going to go north eventually.
Hey, Bakes, what's the volume look today on this little bounce? I haven't seen it.
It is now. You can't ask it to be like it was yesterday. That's asking too much. But it's 565% of average volume. So I mean, there's a lot of Paul Meeks coming in and saying, "Okay, I'm buying it here at this level." And maybe we close the gap more easily than I would have thought. I was expecting to see below average volume, and we're not seeing that today.
Cool.
All right, so we got a potential ancho chili pepper here with Mercado Libre. Take a look at it, and I think we should go next to Bob Morris, who's going to tell us a little bit about the gas and the gas market. I saw a headline today that gas producers are, they're flush with gas, not, they're stopping. I don't know what the headline was. Make sense of that for me, Bob.
Yeah, well, you'll have to hold on to your gas for now, David, because I'm going to talk about Diamondback, which is more of an oil name. So we'll come back to the gas stuff probably next week. But, the note I put out last night was talking about Diamondback being our favorite name coming out of the past week of earnings. Now, that doesn't include EOG, which happens to be my second largest holding behind C&Q. And they reported this morning their conference call is going on now. And they had a great quarter, raised the dividend. And so it's strongly outperforming the other E&P names here this morning by 5-6%. So, this note on Diamondback was pre-EOG, but Diamondback's still among my favorite names. And coming out of the earnings the past week or so, their total production topped the high end of its previous guidance range. What's important here, though, the continued efficiency gains, which we've seen across the sector here, drove that production beat in the quarter and is key to their adjusted guidance for next year on the operating side. And the efficiency gains are so strong here that when they closed this acquisition of a private company called Endeavor back at the beginning of September, they said, well, we're going to need to run 22 to 24 rigs next year to execute our program to sort of keep production flat to maybe slightly up. Currently, they're running 20 rigs. They've closed the acquisition. And they're going to drop to 18 rigs by year end. And they're saying, you know what? We don't need 20 to 20 or 22 to 24 rigs and 5 frac crews. We think we can execute our program now with close to 18 rigs and 4 frac crews and get the same amount of wells drilled, get the same production, everything we said we could do before, but with a lot fewer rigs and frac crews. And that's key in that that's going to save them some costs here. And again, I think what I pointed out before is this Endeavor that they acquired that made them now the largest pure play Permian name out there was a privately held company. And so they were, in my view, lagging a little bit behind the public companies on all the latest technology and methods and everything to optimize their operations. And so I think there's a lot greater efficiency gains to be realized on those assets now that they're part of Endeavor. And overall, part of Diamondback. And overall, Diamondback appears to be among the best companies as far as the incremental operational and cost efficiency improvements that we're seeing across the sector. The one thing I'd point out, though, is, as I said, we're seeing this across the sector. I could go through a list of other names that said they're going to drop 1 or 2 rigs because of these efficiency gains. And that's a negative for the oil field service sector. And we talked before about this, but that's one of the primary reasons we do not own any of the oil field service names here. And I'm not looking to buy any of them anytime soon. So I just wanted to throw that out there. As far as, management also stated that they're ahead of schedule in delivering on the operational and cost synergies from merging with Endeavor. Now, having said that, we've had this wave of consolidation across the E&P sector over the last several years. I have yet to hear a company not come out and say the next quarter that they're ahead of schedule on all the synergies they expected from a merger or an acquisition. But they are ahead of schedule there. Going forward here, they took on a little bit of debt for this merger, so they want to pay their debt down below $10 billion before allocating more than 50% of free cash flow to shareholders. But in the meantime, in the quarter, they allocated 78% of their free cash flow to shareholders. They paid their base dividend, and then the rest of it really went to share repurchases. So as we go forward here, I expect that they'll allocate 50% of free cash flow to shareholders in the near term. And I think they'll continue to focus that on share repurchases apart from the base dividend. I don't think we'll see a special dividend in the next quarter or two unless the stock really pops here. I think they're going to stay focused on share repurchases here near term, given where the stock's currently trading. So bottom line, we continues to be among my favorite names on the E&P side. Again, C&Q and EOG are my top two holdings. EOG reported a great quarter this morning. We'll circle back on that next week after I listen to the conference call replay. But I think Diamondback's a good value here, and I think they're going to put up better efficiencies and improvements next year than the market's baking in here today.
So if you didn't own it today, you'd be buying some.
Yeah, I'd be buying some in here. We talked before about technical support being at 180. We touched at 180, dipped down to 175. So I don't know if Banks has looked at the chart here, but I think technical support now is down 175 to 180, probably 175. But I'd be below 180 here. Yeah, I'd be jumping in, buying, nibbling on here, adding to positions if you don't own it. I don't know if
if I was to put your feet to the fire and said you could only buy one, which one would it be?
Among C&Q, EOG, and Diamondback?
Yes, sir.
Right here, I'd still buy C&Q.
Okay.
And Diamondback is the symbol's FANG, right?
Yes.
See how we're all scurrying around writing this shit down.
Yeah,
yeah, exactly. I actually writing Bob's down here. And I wrote down Mercado Libre earlier. So
C&Q's got the highest dividend. That's Canadian Natural Resources. A lot of people don't pay attention to it because it's a Canadian company, but it's a very unique company. I think it's 5.6% dividend yield here. They're the second largest natural gas producer in Canada. So if you're bullish on natural gas at some point, you get a kick there. In the meantime, they've got the highest margin oil production. I'd also mention among the integrated zone, Chevron, Exxon, and then I also own Viper, which is a royalty trust company in Williams, which is an infrastructure company.
So, Kevin, did you have a chance to look at FANG, the chart there?
Yeah, and I'm with Bob. Here's the weekly. So this is pretty good support. This is the daily, and this level here, 175 or so. We spent some time underneath that. It was 81 in Boston a couple of days ago. I know this is an oilier name, but I want to see things above the 200-day moving average. So you need to get up here to 180 or so. 190 or so before I get more interested, and you need higher commodity prices for that. But I think it's a solid hold here.
All right, and then you had some. Thanks, Bob. You had some names that you wanted to talk about, or you wanted to talk about Bitcoin and sort of what to do next. It's had this big presidential election move, and I keep seeing on my feed that it's going to go to $1 trillion, and you got to get on now. What are you thinking? Where are you on this?
Well, first of all, this is why I like Wall Street Beat so much, because we don't pontificate about ISM and jobless claims and yield inversions. We buy stocks and we talk about ideas and we put actual money to. So here's what I think's going on, and I share this with people all the time. This is the June 23 buy at $19 that I did. And I have a rule that if I double my money in less than a year, I take the original investment out. This is a 10% position, okay? And my discipline is I buy the 10 best ETFs I can find, and I have forced displacement. I sell the good to put in the great. But I took this, a 20% position down to 10 here when it crossed the 40 level and I doubled my money. My other part of what I do is I have a sell discipline, and I've gone back and I've looked at hundreds and hundreds of stocks and charts, and they all start their descent with a close below the 200-day moving average, and that's the signal to start getting concerned. So I sold a third here back in September. And again, I don't think about it. I don't call my priest. I don't call an analyst. I just sell the stock in old Yeller fashion. And now I have to be honest with myself and say, okay, things have changed. And this does happen sometimes, but it's rare. Most of the time when you close below the 200-day moving average, you're starting a trend down. Not in the case of Bitcoin, which closed below the 73,175 level that I mentioned in a show previously. And then this took out this 58.51 level that I talked about on that show. Closed on big up volume, closed above that. And so I topped it off to 10% again. And I bought it right at the open yesterday. Again, didn't think about it, just did it. And so it's a 10% position. I'm up 215%. And I let my winners run. So I'm going to see how this goes. I think 100,000's in the cards for the Bitcoin itself. And I think 75's in the cards for this, just measuring the prior base and putting that on top of where we are now here at $60. So I'm long and I like it.
So you would buy it right here today?
Yeah. Yeah, if it's within 5% of a new high, taking out a new high on big volume, then I'm okay. I avoided the Chinese stocks because they just blew through that and I didn't touch it. So I'm very rigid in my discipline because I just don't lose a lot of money. I refuse to.
And you would buy Grayscale. That would be your favorite ETF, Grayscale?
It's one of my top 10. And I go through 4,200 every single month. I just did it. I highlighted lithium, which I'm looking at, but that hasn't made the.
No, but I think Bob means is it your top ETF for Bitcoin exposure?
Right.
I haven't looked at the others because the others didn't exist when I bought this. So I don't know if the BlackRock ETF is better than this. It wasn't around when I originally bought it back in June of 2023. So I don't. I don't know.
So I can admit that I don't own any Bitcoin. I'm not sure. Bob and Paul, do you own any Bitcoin either in a wallet or in a fund?
I'm a tech dude and I don't own any. It's kind of embarrassing, right?
Well, I kind of followed Warren Buffett's advice and didn't buy it.
Let me make another point too. I like this format a lot because we all grew up in the institutional investing world where you had to be 28% in tech and 21% in healthcare, whatever, the index decided to, make you do. And so you had to be in certain places. I don't care. I'll go buy Lithuanian pork futures if it shows up on the charts. I don't care. And it's a wonderful freeing experience. And so, I might hate Bitcoin in 3 months. I don't know. But for right now, I'm taking the money. It's up 215%, and it's going north.
All right. Well, you've had the right call. My worry of not understanding it wholly or worried that one day I'll wake up and it'll be like, hey, where'd your money go? That's cost me a big opportunity cost. It sounds like for Paul and Bob too. I want to touch on some generics. This isn't the easiest thing to do because I hate admitting mistakes. But so going into the quarter, I had said, look, I own generics. I like reporting this week. And this is a great turnaround story. It's been slowly turning around. I've owned it for a long time. So the chart looks great. And then they reported a quarter, which I actually still think it was a fine quarter. And the stock went down, I don't know, 10, 12% on the day. Now, I'm still up on it, so don't. This is Teva.
This is Teva, right?
This is Teva. So don't, don't make me, I'm not crying over this or anything, but I hate being wrong and coming on here and being like, ahead of the quarter, I'm really excited. And then it turns out to be that I was the only person excited. Revenue was up 13%. EPS beat the consensus number. They raised their forecast. So they ticked all the boxes that I was looking for. The base generics business in the U.S. was up 30%. International was up 13%. The pipeline's coming along well. So I'm going to just attribute this to who knows, or someone knows and I don't. So I have to keep looking to see what caused this. Now it's settled down. Now going into this, the thing that bothers me the most is I said I didn't like how it was trading. Like it just seemed to be bouncing along but weakening. It wasn't bouncing along and kind of flat. It was kind of weakening into this. So it is what it is. I actually still like it here. It's a super low multiple. I want to see currently. I mean, it's a 7 multiple. So on this year's earnings number, and now they have a ton of debt, but they're slowly paying that down. So that is a risk. Viatris, which used to be called Mylan, they reported, and I own like 3-to-1 Teva to Viatris. And Viatris, the stock was up 16%, 15%. So a little bit of consolation, but it just goes to show you that if my thesis was generics are the most hated part of healthcare right now, no one really likes them, the multiples are super low. When you have that, you should sprinkle around. A lot of people just pick best in class in a group, and that's great if you're so confident that you can pick which over-levered kind of junky company is going to turn around the best. They're essentially the same company. They're both highly levered, but Viatris is at a much lower multiple. So it's at a 5 PE. So not surprisingly, it did better. So I own both. I also own a little bit of Amneal and Hikma, a couple other generic companies. So I think it's a good sector because people hate it, and it's good to have some exposure to this, especially with the Make America Healthy again. I'm interested but fearful to hear what Bakes has to say about the charts. I asked him to look into these last night, and he's probably going to tell me like, "Oh, sell them today. You're a dummy." But what is it, Bakes? Give me the news.
I'll do Teva first, and this is what I don't like. I don't like this inside out day, or reversal where it hits a high and closes below the prior day's close. That's concerning. And if you notice here, this pink volume that I'm highlighting, you didn't have a lot of enthusiasm going into this in terms of up volume, buying pressure. I don't like this relative strength line hitting new lows here. Now, I will say, here's the 200-day moving average, and we're sitting here in decent support at 17 or so. And so it's not disastrous because I think it's so cheap. And maybe it's dead for 3 months, and then they have a better quarter where they engender some enthusiasm.
All right. And how about Viatris? I'll take that as a win almost. I'll see what I want in it, which is, okay, it's not a disaster. So what about Viatris?
Yeah, and this is, the muscle memory of markets right here. I mean, going back years, and it's never bullish when a company says, we're so despised, we're going to change our name. But we've worked all that off and beaten it down. So if it takes out this 1362 level on big volume, like it's trying to right now, then you start eating through all this resistance that's over here. And you go to 16 or so probably if you take out that 1362 level. So every dog has his day, and maybe this has its day coming up soon.
Yeah. So for people who don't know, this used to be run by Robert Corey and Heather Brecht. The famous EpiPen raising price thing, and there was just a lot of negativity around it. That management team's gone. The board has changed over. I would never have owned it previously with that previous management team. It had been a great call to stay away from them, and now I think that things have changed. It's still it's still generic, so it's still not a high margin business. But let's see, what else do we have? Do we have anything else to end this great week with? Do we have anything else?
Oh, it's been a good show.
Bakes, Bob, anything?
Is Mark Cuban's effort an IPO waiting to come to market?
I've seen so many memes of his becoming Rachel Maddow. I think it's actually kind of funny that the post this election, he was so anti-Trump. I wonder what's going to happen with the whole PBM litigation, because his pharmacy business is trying to beat up on PBMs, and the question is, how much retribution do do the Republicans want to get? To be honest, he's done a great job with, it's called cost plus pharmacy.
Yeah.
Even if any subscribers don't even care about stocks and they just want to know where to get cheap drugs, look at Amazon Pharmacy and look at Cost Plus, and they often have really good, really better prices. I don't know. He says that he's not going to, but I think at some point, just the capital expenditures of getting the distribution, they're still very small. They PR wise, they punch above their weight, but they could be much larger and much more impactful. So, but I think at least for the next month, he's probably going to keep his head low.
Point taken.
Well, with that, have a great weekend, everybody. And this is Wall Street Beats. If you're interested in what we're doing, and I would go to wallstreetbeats.com and subscribe. See you next week.
Thanks, guys.
I got a lot out of that one.
Mercado Libre. Fang.
I'm missing the EOG call. They must be saying good things because the stock keeps going up as they're talking.